Morning, market chameleons, and there's Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Awesome. It's Friday, end of another big earnings week. I'm sure we're gonna have some good stuff to talk about, but before we get started, let's go right to the disclaimer. There it
Yep.
is.
Okay. Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance.
And there's
And there's a disclaimer.
all right.
Okay. Let me share my screen here. And what we'll do is quickly just scan what's moving into pre-market hours. We started out yesterday going through some of our different earnings reports. So I think, we didn't finish that. I'm going to continue that today. And if there are any questions, Will, let me know along the way. I'll try to answer as many as I can.
Sounds good.
Okay. So this is the pre-market report. Stocks that are trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look at the higher market cap stocks. I'm going to use this filter for stocks 20 billion or higher market cap. So we see 21 made the percentage gainers list, 5 on the percentage decliners list. From that perspective, looks that it's more favorable towards the bullish side at the open. Snap made the top of the list, up 5.3%. That looks like it's reacting to earnings that it released last night. And you could see here nothing else is jumping. I think some of these are also reacting to earnings. So we had a bunch of earnings yesterday: AXP, KMB, Intel. These are down on the day. So I'm not going to spend, nothing's really leaping out at me right now, and I don't see huge volumes in the pre-market hours. So I might just skip on to the earnings unless you have questions. Well,
Nope, you can move forward.
okay. So we ended up yesterday looking at this report, upcoming earnings analysis. And what we did was we went over the summary page, and basically the summary page kind of highlights some of the stuff in the other reports. So up top here, just a quick recap. This is showing top 10 option straddles where we compare the implied move. So we're taking the premium of the straddle. You're buying a call, buying a put. You're paying premium for both options, and you need that stock to move enough to cover the cost of that premium. So we're taking the premium of the options and converting it to the implied move. So over here, and this is comparing it to the historical average moves of the stock after reporting earnings. So this is the implied move heading into the earnings, and we're comparing it, well, historically, how much did the stock move up or down on average after reporting earnings, and then we're looking at that benchmark and saying how much over or under are we around that benchmark. So here are the options that are, the premium is above the historical averages. On this side, this is where the premiums are below the historical average moves. All right, coming down here, this is just looking back in the past 2 weeks and seeing, well, how did similar situations what happened after the earnings were reported to the straddle. So it's just looking at, these are upcoming earnings. These are looking at earnings that were just recently released, and what happened to the straddle. Was it profitable, not profitable after earnings? Down here, it's just going really quickly just to summarize it. It's looking at the last 2 weeks, stocks that reported earnings. It's breaking it down into different statistics. How many of the stocks were up after reporting, how many were down. So we're looking at the percentage stocks up, percentage stocks down, average returns. Here we're looking at the straddles, average returns. and so forth. So really quick recap so we could move on, but we did this yesterday. So in yesterday's show, we spent a lot of time on it. I'm going to move on then to look at these other reports, unless you have any questions, Will, from yesterday.
None yet, D. You can move on.
Right. So, and we have filters up here. These filters, they control all the reports. So anytime I use one of these filters, it's going to change this report and all the reports up here based on these filters. The full report, we kind of go over this almost every day, so I'm not going to, spend time on it right now as much just to get to the other ones, but this is just looking at upcoming earnings for next 2 weeks. You have the symbols, when the expected date of the release is, the implied straddle, and then we compare that straddle, the option straddle, what it's implying compared to the historical actual realized moves to see how much above or below it is the historical benchmark. So I'm going to move on to this next report, full report for last 2 weeks. So it looks at the last 2 weeks of earnings, and we have the symbols over here. These were the current stock price and the change yesterday. We have average stock volume, average option volume, just as reference points. This is when the earnings were released. So some of these were today before the market opened. So we don't know yet, by the end of the day where these straddles will end up, but these were today before the market opened. They're reporting. We still don't know where the straddles will be until the markets open up. But if we go back historically, we could see which stocks reported earnings and how those straddles performed. So here we could see, I'm just going to hover over there, HBAN, reported earnings April 22nd before the market opened. The opening gap, 0.6%. That day after the open, the stock drifted lower, so it was down 6.7% for the day. The straddle day before was implying a move of 6.9% in either direction. So, but we see that straddle actually was up 26%. So looks like this move was a little bit more muted, right? It's almost, almost there, almost what the straddle was implying, but that straddle did gain because most likely, the move was close to what was expected, but since the stock was down, I'm assuming that the implied volatility probably was up. So that straddle actually, if you held it to the end of the day from the previous day, it was up 26%. So here you could see each individual straddle would have returned from the previous day. So in this situation over here, here's a stock Dow. It looks like after reporting earnings, that stock was down 6% for the day. The straddle day before was implying a move of 3.4%. So you could see that busted right through. That straddle, if you bought it, bought the call, bought the put, by the end of the next day, it was up 83.8%. Okay, so this is really quickly, you could use this as reference to see what's been happening more recently in the last 2 weeks. So let's just say I was interested in a specific industry. I could come over here and I don't know, what were the first ones? Banks?
Banks usually start the earnings season, yeah.
So let's see how the banks did. So let me see, banks diversified. So these would be the bigger banks. So over here we got 1, 2, 3, 4, 5 banks, right? So let's see, this is what happened after they reported earnings. We could see here the opening gaps. One opened higher, looks like Citigroup. The other ones all opened lower after reporting earnings. So this was just at the open. By the end of the day, we see that 4 out of 5 were lower on the day. 1 was higher. So Wells Fargo, that's the only one that actually was up on the day after reporting earnings. How did the straddles perform, right? So how well were those options priced? So we see here 3 out of the 5, those straddles lost, value. So the one lost the most was Citigroup. By the end of the day, it was down 56.4%. In other words, you bought the straddle, waited till the end of the day after reporting earnings. That straddle lost 56.4% of its premium from the previous day. So three of them were down, 2 of them were higher. The best performing one here was Wells Fargo. And I'm assuming here, just based on like where it opened, probably because the opening gap was very muted, only down 0.4%. So not sure exactly without seeing all the markets, but it looks like maybe in the morning it was probably contracted, my guess is, but then it continued to rally throughout the day. It was up 5.5%. That's probably what made that straddle profitable. So really quickly, that's kind of how you can look at this report. I'm going to take this filter off. Let's say you just wanted to see a particular stock in the last 2 weeks that, reported. You could just put that symbol in here. So I don't know what Netflix. So here's Netflix. They reported April 20th after the market closed. We see that straddle was pricing in a move of 6.5%. The actual move that day was down 7.4%, right? So opened down 7.7 on the day though. It was right around there, closed that down 7.4%. So that straddle, because the straddle underestimated the actual move, was up 19.9%. All right, so if you bought that straddle, almost a 20% return on that straddle. Does that make sense to everybody so far?
Let us know, chameleons, if that makes sense to you. Everyone looks good, D.
Okay, so I'm going to move to this last one here. This is the straddle performance. It's kind of the same idea as the last 2 weeks, but this is just looking at the last one. So if it reported a month ago or 2 months ago, it's just looking at the last reported one. So let's just say like Apple. I want to look up Apple. So I'm just filtering out the stats for Apple, and I could really quickly see, well, what happened the last earnings. So last time they reported January 27th after the market closed. Straddle was implying a move of up or down 6.8% before earnings. After reporting earnings, stock was down 3.5%. So obviously that move is not as much as the straddle was pricing in. So that straddle from the buy side lost almost 40%. So the premium came in the next day by 40%. If we look at the last 4 quarters, though, on average, the straddle, if you did them for 4 quarters in a row, on average, the straddle did gain 23%. So it looks like there's one really high one maybe. So the biggest winner, 178%, biggest loser, 53.7%. So those are really quickly how you could just reference, a historical one through the screener. And obviously, if you want to do more research and go in more detail with, going back further in time, then you could go to the individual symbol and you get a much deeper analysis. But this is just to quickly give references from the top, just the top line. Is that okay with everybody so far?
Yeah, that's very helpful, D.
Okay. So a couple of things I wanted to mention also is, people ask me about like new features, what's coming up. And we are going to have some coming because we're talking about earnings. There are going to be a few right now that we're working on that are going to be enhancing the earnings analysis. And some will be, that are going to complement some of the existing features like our fair value, because we got that fair value model that we're going to be enhancing. Then other ones will be brand new, and some will be enhancing the option strategies. So while it's internal, you guys do not have access to this yet. Okay, I'm still working on it, but I'm just going to kind of introduce some of these concepts, because sometimes people, while I'm working on it, give me suggestions that I could look at. So I'm just going to briefly kind of go over some of these reports, unless people have any questions on anything we covered, like today or more recently, or any other questions.
Yeah, let's check out those new reports. People always love the new Chameleon features.
Right. So here, these are my internal reports. I'm going to show you here. And we got guys right now, internally, that are working with us compiling data. And this one here is, well, before I show you that, let me just open up a new page here and show you kind of the setup. So we often talk about a company can report earnings, and sometimes their earnings, and here's one here, Intel, right? So Intel reported earnings, they're down 3.2% on the day. And I'm going to come over here and we're going to take a look at their reported earnings per share. Right, so this is yesterday after the market close. Intel reported earnings. So they reported $1.39. The estimate was $1.15. So they beat here by 24 cents. The revenue estimate was 17.9 billion. The actual revenue 19.7 billion. So they beat there by 1.8 billion. So over here, we're kind of seeing that that's a pretty healthy beat. You would expect that, the conventional wisdom would say, well, the stock should be up. Is that correct? And, and I try to point this out to people because a lot of people are surprised that are not used to looking at the data. That's usually what they assume. So the stock is down 3.2% in the pre-market hours. And just by the way, you could see here, similar situation, previous report, stock beat 42 cents, earnings per share, beat on revenue, stock was down 9.3%. So there are a couple things going on here. One is that the stock really is reacting not to analyst expectations, right? So these are analyst expectations, but analysts do not control the price of the stock. Those are shareholders, stakeholders. They have expectations, and their expectations could be different than this, right? So we talked about kind of looking at how the stock performed between earnings and what the expectations could be of the traders building up into the earnings. Then another thing that's going on is that even though they're reporting in earnings, it could be a beat. Investors are really looking at forward-looking guidance. Okay, you might have done great this quarter, but how are we looking going forward? And going forward is really important because you could have really bad quarter, maybe you have a good explanation, but if going forward it looks optimistic, you're going to make money, you've got contracts, then the stock could go up even though you missed this quarter. You could do in the reverse side, you could have had a knockout quarter, but if you're saying going forward we don't look so good, our sales are down, we lost some contracts, stock could be down because the management is letting you know going forward it's not looking so hot, right? So those are things that come into play. And when we look at the fair value of the stock, we try to estimate, well, where do we think the stock should be around, right? So I'm going to go here to the fair value. We're going to look at a couple things. One is we're going to compare where the stock usually trades based on its multiples, historical multiples, and using that, we come up with a fair value. And based on that, we compare where the market price is to see how far are we above or below. So here, if we just use those historical estimates, Intel looks like it's trading 13% below its historical multiples. And then here, this is looking at forward-looking estimates, and it's saying that, okay, if we take Intel, right, and we say, how are we looking going forward versus the rest of the market? Where would Intel's implied value be? So here it kind of looks like, there's a big discount using forward-looking estimates. But forward-looking estimates, we don't know. We have to kind of project it, right? Like, what do we think Intel's revenues are going to grow? What do we think Intel's earnings are going to grow? Like, and what do we think the rest of the market? And then we kind of make that comparison. So that's what we're doing here in a model. So I'm just using Intel because they just reported earnings. So we see here that our assumptions is that operating margins Intel, we see that currently 31%, 3-year average 31.7, 5-year average 29.8. So in our model, we're putting in that we think that operating margins in Intel are going to be 31% going forward. That's just an assumption we're making based on historical data. And this is for SPY. Again, just really quickly, what are operating margins? Operating margins are for every dollar in sales Intel makes, if we reduce that by what it costs them to make that sale, and we reduce it by the salaries, by research and development, we take all that out and we just concentrate on their core business. How much do they have left over as profit? So for every dollar in sales, they have 31 cents left over as profit, and that compares to S&P 500, 9.8%. Okay, so what do we think they're going to, how much do we think their revenue is going to grow? And here's the tricky part. So this is where the revenue growth comes in that I'm going to show you the examples. So we see here in the last 3 years, its revenue did grow, on average for five years, it grew by 7.1% year over year. 3-year average 7.5%, and in 1 year it grew 8.2%. So those are historicals, and unless we get some guidance, we don't know how they're going to grow. So we kind of default to without any guidance, we just say, well, if we assume that the last 3-year average persists the next 5 years, how does Intel look? But sometimes they give us guidance, right? So, and we look for that, and those are going to be in the. Let me just come back here. And those are going to be in the press releases, right? So whenever they issue a press release, they talk about their earnings and then they issue some guidance. So this is the report I was building up to that we're doing right now. We're going to be compiling not only what they actually reported, but what is their guidance going forward. So we're going to compile that list, and this will help us also improve our fair value model. Any questions, Will?
None yet, D.
Okay, so let's take a look at that here. Since you guys don't have it, I'm going to use my report that we're working on here. So here we could see these all are forward-looking estimates, forward-looking guidance that are issued by the companies. Okay, so over here, for example, Honeywell, it looks on April 23rd. So this was today. They reported earnings. They told us for full year fiscal 2021, they expect their earnings to be $7.75, between $7.75 and $8, which is a slight increase from the previous guidance, right, on the low side. If we compare that to the previous year's earnings, fiscal 2020, it was $7.10. So we see that they're guiding us that next year they're expecting earnings to go up 11%. So why do we listen to their guidance? Is because the company itself knows more about their company than anybody else, and usually analysts are just basically using that as their own, basing their own estimates on the guidance. Maybe they'll tweak things here and there, but usually when the company is telling you something, they're the closest to their business out of anybody, right? No analyst is as close to the business as the management is. So here we see Honeywell. is guiding us high, saying that their earnings are going to grow about 11% the following year. Remember, this is a prediction they're making based on their own internal data. For revenue growth, they're telling us for the fiscal 2021, they're giving us an estimate here. Their revenue is going to be between 34 billion to 34.8 billion. So if we compare that to the previous year, that's a 5% growth. So basically, they're telling us that, you know, this is where they're estimating their growth to be, which is better than going the other way, right? Better than going down. So let's just see. I'm going to filter out Intel really quickly. So here's Intel's guidance. So they reported yesterday. So they're giving us, they think for second quarter, right? They just reported first, second quarter, they think earnings per share $1.05. But if we compare it to last year's, that they made $1.23. So that's a 15% decrease going forward, right? So I'm not looking at the one they just reported. We're looking at the one going forward, 15% decrease from previous year. What about their revenue? So here, Intel is guiding us, saying their revenue is going to be between about 17.8 billion. Well, if we compare that to previous year, that's a 10% decrease. So here's where it comes in, where we're getting an explanation why is the stock down, right? They beat by healthy margins, but now this is where the real reason is coming for their, you know, why the stock is dropping. They're also giving us estimates for the full year. So that not only the next quarter, but this is what they're telling us. For the full year 2021, they expect earnings per share to be $4.60. If we compare that to the full year last year of $5.31, they're declining 13%. So remember when we were doing the fair value in Intel, we didn't have information. So if we based it off the last 3 years, we're expecting it to grow by 7%, right? Because that's what they grew on average, by 7% year over year. But all of a sudden, they're changing it up on us and saying, hey, I didn't read that. And you could go to the link and kind of read the explanations here. But now they're guiding us the other way. Okay. What about revenue? So this is the revenue fiscal 2021. They think revenue for the year will be about 72.5 billion. How does that compare to the previous year? 77.8 billion. That's down 7%. So now you see they're painting us a different picture going forward, which, you know, is different than what we were looking at the historical data, right? So let me see the historical data, right? This is all going lower. Historical data, you know, they're beating, right? And really the revenues were climbing year over year. So now they're giving us a different picture. Stock is lower because everybody now is taking their models, like we were talking about, right? And now they're adjusting their models based on the guidance. So no longer 7.5% growth year over year. Looks like they're going the other way. Hopefully we're almost out of time.
Yeah, no, that's super helpful, D. We had a couple quick questions, and I'm sure these are more towards features that people would like to see in the future. Rob from Chicago is asking, is there a way to run a sector through the fair value screener to get a list under and overvalued list? I think that's been touched on before.
Yeah, and that is something here I'm going to show you really quickly, you know, because you got, like I said, all I'm doing is working on it.
Yeah.
So it's not ready, but here's like a rudimentary one where we're looking at fair values, you know, using historicals and forward looking. So all these still working on, and just like I showed you the most recent data, that is not yet inputted into the model. So I'm still working on those models. That's why this is not going to be ready yet, because it's not fully develop, as we're getting more data in. I'm using those inputs, and as it gets a little bit more fully developed, we'll get that screener out.
Well, another active chameleon, Abhishek, says, this is great. Can we also add price change since last guidance? It would be very useful to see how the price performs with higher or lower guidance. That was something Abhishek said on the chat.
Okay, I got to think, because you'd have to kind of look at the price change from which, one day to, what you'd have to kind of define then, like, the price change, the range of days, but I'll think about that.
Yeah, well, and Abhishek, we're always open to suggestions. Anyone, you can email us, support@MarketChameleon.com. We're always super helpful to people who are asking for different things. Doesn't mean they'll all get out there, but we definitely listen to all the chameleons. Dima, awesome job. You have a great weekend, buddy.
Thanks, everyone. Guys, have a great weekend. Stay safe out there. Have a good trading day. I hope to see you guys on Monday.
Trade in peace and enjoy the weekend.